Hi, Sean Haynes with the Ag Center, giving a weekly update on interest rates, what's going on in the farm markets. Interest rates have been kind of coming down on the short-term side, about 7.5, 7.25 recently. Long-term rates for the 30-year at about 7.79%, almost 8. Rates have been moved up in the long end after the FOMC cut their rates, and a lot of guys are having a hard time understanding why. The FOMC's cut rates twice this year, quarter point each, got us down about a half point. You're seeing that in the short-term rates, but up till now, they've been signaling that they're going to cut rates again next year between 4 and 6 more times. This meeting, however, they said, hey, we're not going to cut those additional rates 4 to 6 more times next year. We're going to cut them 2 more times. And so what's happened is those long-term bondholders that normally have baked in these 4 and 6 rate cuts going forward and dropped their rates on the long-term side, I looked at it and said, hey, I don't have the rate cuts coming forward that I expected, so I need to reprice all these 10, 20, and 30-year notes that I'm putting out for mortgages, and so those have pushed up. And I would not be surprised if the FOMC stays kind of consistent on that rate cut being 2 versus 4 or 6 next year, that we'd see about 8% rates on the long-term mortgages kind of coming in. The reason that the FOMC has kind of done that, just to give you guys some perspective, is the jobs markets remain fairly good. Unemployment's low, new jobs creation is pretty consistent. Usually, they like to see stuff below 150,000 jobs per month on creation to say that the things are under stress. And then also, it looks like inflation's kind of raising its head again. It hasn't moved up a whole lot. It's about 2.7% for the month of November, but that was a little higher than the prior month. And you're looking at the continued pressure on housing and food, which is really hitting the pocketbooks of folks overall. So, as long as inflation's there, as long as the jobs market is doing well and unemployment remains low, it's going to be really hard for the FOMC to make sense of dropping rates any further than those 2 rate cuts. What that means for housing markets and ag real estate, it's going to be really tough to say, but it's hard to kind of substantiate the prices staying as high as they are with the affordability problem we have on the home mortgage side, in my opinion, as well as on the ag real estate side with commodity prices being under pressure. And now you're adding 2 points to the rate if it makes sense to buy properties. And I think it's going to kind of continue to lengthen the time the properties are on the market to be sold. Also, looking south market, you've got water issues and things like that are playing in and bringing these property values down on especially permanent planting properties. And nobody's really trading at high volumes, right? A lot of money sitting off the sidelines, just so everybody knows, between private equity, institutional money, and what have you, waiting to see what happens in the market, see if it kind of comes down, if it's rate pressure, this commodity market pressure pushes them down finally on the land side. And if they do, you might see them kind of come in. And once they start buying again, then you should start seeing a lift or at least some additional interest in ag real estate again. But that's what I've got for this week on kind of interest rates and what that's doing to the rest of the market and farm. Thanks.